FTSE 100. Joining us is Marcus Bullus, Trading Director at MB Capital. 3% gain yesterday. We're up a little bit more. And look, the St Ledger Racing Festival started yesterday, Mark. As you know, we were supposed to sell in May and come back on the St Ledger, which actually would have, I worked out, would have paid off this year, because we would have missed the 13% downdraft in the FTSE in that period, and we would have started yesterday with a 3% gain.
You're basically saying we would have missed out on all the fun.
Yeah. Fantastic, yeah.
Exactly.
You were enjoying it then?
Yes, I mean, we're looking for short-term movements. It's difficult at the moment because, of course, we're waiting on what the heavyweights are going to be saying, Barack Obama, the G7 meeting, and it's always looking at that. The expectation is what's driven up the market over the last couple of days. And from that, we'll have to find out whether or not we can pick holes in the policy that gets laid ahead.
Yeah, I mean, it seems in some ways we've had event risk that has gone the Bulls' way. Constitutional Court, Italian Senate vote last night. As you said, we've got the ECB today. We'll see what they say. But and then Obama and Bernanke. I mean, there's been press speculations. In fact, what he's going to come out with is a bit more than we might have thought last week.
Which now the problem is it going to be a little bit more again to keep the market buying in, or is he going to miss expectations? It's difficult because on the ground, with results that's coming out, it's been very positive, but everyone's expecting or wanting more stimulus to keep driving this market forward.
I mean, a couple of points there. First, if you know, it doesn't seem to me that they're likely to come out with any sort of dramatic form of QE. You might get some sort of job stuff from Obama, but even the announcement effect is going to be watered down by the fact it'll have to get through Congress anyway, so there's a whole problem there. Second problem is that if I look at 2012 EPS forecasts, both in Europe or in the States, they're still extremely high. In other words, they're higher than they were at the beginning of the year, even though growth expectations have been marked down sharply. So you've seen this year's numbers cut, but essentially nothing's happened to next year's number. Seems to be a lot of room, downside room for those numbers.
There is, but I mean, stocks, you look at the heavyweights, they are fairly cheap at the moment anyway. Banks, historically, are very cheap. Things like Aviva, it's 7, almost 8% yield at the moment, so there is a lot of room for them to be coming down and for dividends to be slashed, but still be better money than if you're putting it elsewhere. But things like QE3, I don't think that's going to get announced today. Why would it? Let's allow Barack Obama to try and boost the markets, and if that doesn't work, then we've got later on in the month, what is it, the 21st, 22nd, for Barack Bernanke, sorry, to go on and announce
briefly,
that.
If we do see some type of pre next round QE, would that give a lift to the markets?
I mean, history suggests that it definitely would. I mean, that's what's lifted us over the last year. And of course that's what brought the FTSE in line up towards that sort of 6-1 level. And back then in April we had a lot of positive data coming out and we failed to break it. We're now in a position whereby there's a lot of concern, but as soon as there's a little bit of good news, people pick it up and run with it.
I agree with that up to a point, but there's a couple of issues here.
We've got to keep those thoughts, unfortunately, because we're coming up to the right decisions. Yeah, you're with us. Marcus Bonaldo, thank you so much. Marcus Bullus, Trading Director at MB Capital. Still to come, though, the Bank of England delivers its rate decision after the break. Stay with us for that, and they don't wait for us. They don't wait.